Here we are in year 2, episode 1 of the Simple Success Podcast. Year 2? Yeah, amazing, right? But what's not amazing is that this is financial life coaching from a happiness perspective. Yeah. Coaching happiness. When you change you change everything. Financial planning is super important. Today, we want to look at this very necessary topic as we enter the new year. Financial planning and financial well-being. Financial planning is super important. You mean one can be financially sick? No, I don't think so, DT. But you know what I do think is that it's important to have a plan in place for your finances. It doesn't matter if you're young or old. A good financial plan will help you achieve financial independence. This means having enough money to live on without relying on others for support. Setting up emergency funds to cover your financial emergencies. So, why is financial planning so important? Because it helps us make decisions about our future? Yes, but more importantly because it gives us peace of mind knowing that we have done all we can to ensure we have a secure future. That makes sense. How does one go about creating a financial plan? There are many ways to create a plan for your financial health. Like using financial advisors? Maybe, but not necessarily. You can do it yourself after all. But having financial goals is great. The first thing you need to do is to decide what type of financial lives you want, the financial decisions you would like to create. There are lots of different options available in the financial planning process. Like online calculators? For some, yes. Spreadsheets? I do that. Or just maybe writing stuff down. Can't be simpler, and there are plenty of resources available to help you get started. Whoa. Slow down, John. You lost me there. Let's start with an investment portfolio. What is that? Oh, okay. It's where you put your money into stocks and shares with or without financial advice. These investments give you the opportunity to earn interest over time. They also provide the potential for capital growth, which means that your initial investment could eventually increase in value. If you invest in a company that has a high return on equity, then you stand to benefit from any dividends paid by the company. In addition, when you sell your shares, you receive the profit made from selling them. You can also seek the advice of an investment advisor. Advisor with an E-R? Yes, or O-R advisor. They both work. Oh, I see. You make me smarter with every episode, John. Well, thank you, Doubting Thomas. Now, let's talk about retirement planning. Saving for retirement is not something that everyone wants to do. But if you don't save, you don't retire. Unless you get lucky. Or that. Although that's kind of ageist. Because when you get lucky, it's you finding your car at the mall. Where were we? Oh, yeah. Can I do a complicated retirement plan that the average Joe can't do for himself? Or herself? And the answer is, yes, I can. But I won't. What? Why? Because it isn't necessary. It only takes 2 numbers, and your takeaway is really easy too. Wow. I never knew that. Most people don't realize that they need various different investment vehicles in their financial picture to save for retirement until it's too late. Don't worry though, as long as you start sometime, you'll still have time to build toward at least some of the things you want. Maybe even with a holistic approach. Oh, okay. I'm getting it now. So how do I go setting up my own personal investment portfolio? Well, this depends on your financial situation, your goals. You might want mutual funds. Mutual funds are groups of investments that share similar characteristics. No, not always the same investment risks, right? Which we'll explore more after this break.
Hello, everyone. This is John with the Simple Success Podcast, financial life coaching from a happiness perspective. Because we know you want to show us some serious love in return for the tremendous benefits you get from us. Please head over to the support link in our written show notes. That's the words on your podcast player. There, you can choose from a $9.99 per month doing level of support, a $4.99 knowing level, or a basic intro level of just 99 cents per month. Whichever you choose, thank you so much for helping us do this for you. To leave us a voice message which just might see the light of day in a future podcast, go to those same written show notes. You'll go to a site where you can leave a video, audio, or text-only message, depending on how you feel at the moment. You can also send us an audio file attached to an email if you use more than just your phone for stuff. I won't repeat those links because weird. And anyway, show notes. It's all in there, and it's all easy.
You were giving examples of mutual funds before the break. Right, DT. It's a basket of stocks. Or a basket of bonds. Or both, maybe. Or both, for sure. It might be one that invests in both UK and US equities. Another example might be one that invests only in blue chip companies, or tech companies, or green companies. Well, that sounds interesting. How do I find out more information about these things? Good question. There are several websites that offer free information about investing, including MoneySavingExpert.com. Also, there are books that can help you learn more about investing. One such publication is called The Complete Investor by Stephen Leib. Thanks for explaining that, John. Now, I've got another question. What should I look for when choosing an insurance policy? Insurance policies are designed to protect against certain risks. The type of risk that insurance covers include death, disability, illness, injury, damage to property, loss of income due to unemployment, and so on. When looking for insurance, you need to consider what type of coverage you require. For example, if you think your home might be burgled, then you might want to insure your possessions for replacement costs. If you own a car, then you'd insure it against theft. You also need to consider what level of coverage you require, and this will depend on your circumstances. For example, if it's unlikely that you'll ever use your houseboat, then you probably won't need to insure it. On the other hand, if you often travel overseas, then you may want to insure your boat against losses caused by natural disasters. Oh, okay. I see where you're coming from. So how does planning tie this all together? It's a job opportunity. Huh? Yeah, it makes you qualified to be hired to manage your family's money. Oh, that's cute. Planning also helps you make decisions about your wealth management. For example, if we take our hypothetical houseboat owner, he needs to decide whether he wants to insure his boat. He also needs to decide which company to use. Then he needs to decide whether to purchase single or multiple policies. Finally, he needs to decide how much coverage he requires. That sounds like a lot of work. I'm already dizzy thinking about it. Why bother? Yes, it's quite a bit of work, but you only get financial stability when you plan ahead. By doing this, you'll know exactly what you have to pay each month, and you'll avoid any nasty surprises. Okay, let me try again. What should I look for when choosing an insurance provider? Future performance. No, really. If you need them to pay, do they pay? Oh, that's easier to see. Firstly, check their reputation. Look online for reviews of the company. Ask friends who they recommend. Secondly, ask them about their customer service. We've talked about insurance before, DT, haven't we? Oh, I remember now. Yeah, it was episode 38 from late 2021. Good memory, DT. The most basic reason for financial planning is to ensure you pay your bills on time. You don't want to ruin your credit scores by defaulting on your financial obligations, now do you, DT? No, I guess not. I have a great explanation thing about how to ruin credit if you want. No, that's okay. Maybe later. Right. 2020 and 2021 have proven to everyone that they need to plan their finances and spending. In 2020, the world was hit with the COVID-19 virus, as we all know. Many people lost their jobs and many businesses closed down. With the economy being affected, many people are now struggling financially. As a result, many people are having to change their lifestyles and do some careful planning. They're not doing the same old with their cash flow. Instead, they are saving money to cope with the situation. Employers may consider giving increased attention to their employee financial wellness programs during these challenging times due to concerns about employee retention. At least that's according to a recent study from human resources consulting firm Mercer. But in 2022, like we should always be doing, we hope for the best but prepare for the worst. We all need to be prepared for the unknown future. That's why we've created this episode to kick off the year. We aim to help you become more aware of your personal finance and budgeting needs. And hopefully, we can help you save some money along the way too. Right, DT? Was it the consulting firm thing that put you to sleep? What? That made you sleepy? You need a break. Oh, you too. Okay, me too. So here we go. Break number 2.
We know a lot about you already because we know ourselves. For example, we know that you know how to listen to our podcast. We also know that you probably know how to subscribe. The reason every podcast asks you this is because when you subscribe, you automatically download all future episodes of that podcast. This means better rankings for the podcast, more attention from advertisers, and more money. And this means more and better stuff for you. So your motivation is simple and easy. Subscribe today, wherever you get your favorite podcasts. Oh, and don't just try to subscribe. There is no try. There is only do. We're changing the way we look at things. And remember, that's good. Eso es bueno. C'est bon. Also remember, this is financial life coaching from a happiness perspective. Coaching happiness. Our call to action is right in the show notes. Find it and you win too.
Does that mean I have to plan and budget for everything, including coffee? Fun fact, DT, did you know that Americans spend $20 billion per year on coffee alone? Is that like billion with a B? Yeah, like a B. And I'm guessing you want me to skip my daily cup now, right? Yes, because... Yeah, $4 a day is $120 a month and $1,500 a year and all that. Right, great. Now, let's get started saving. Now, stat. Wait, John, I thought we were going to talk about something else. Please. Sorry, DT, got carried away there. Anyway, let's start with the basics. Here are some tips to help you start your journey into becoming more aware of your finances. First, don't panic. Take one step at a time. Start small. Do something every day. Don't worry about making big changes right away. Just focus on getting better at managing your money over time. Second, set yourself up for success. Make sure you have a good understanding of your current financial position. Know where you stand. This sounds a lot like those New Year's resolutions that everybody makes and soon forgets about. Exactly. The only difference is to be successful, you should stick to your plan. So what's next? Third, keep track of your expenses. Use a simple spreadsheet or app to record your income and expenditures. This will allow you to see where your money goes. Record every penny that goes into your bank account. This way, you'll be able to spot any unnecessary expenses. And I can help with that. Fourth, learn from your mistakes. If you find yourself in debt, then you may want to consider paying off your debts as quickly as possible. This will free up cash so you can put it towards other things. Fifth, save regularly. Set aside a certain amount of money each week or month. Put it somewhere safe and accessible. Save money. Start saving as soon as possible. Even small amounts saved regularly will add up over time. You might even consider opening a savings account. Sixth, make use of tax breaks. There are lots of ways to reduce your tax bill, and I can give you some examples if that's what you're looking for. Seventh, avoid credit cards. Credit card companies often charge high interest rates, so instead of using them, try to pay off any outstanding balances each month. I love credit cards. They allow you to buy expensive stuff. Yes, Doubting Thomas, but remember, you'll also end up paying interest to the credit card company. Oh yeah, I know how much interest I'm paying. And it's $2,500 a month. Oh, well, that's not great. But we've come to an important point here, which is, let's say you decide to take out a loan to build a house. How would you repay it? Oh, by selling my kidney. No, silly. You'd probably borrow against the value of your home, in which case you'd pay back the loan by repaying the mortgage. Okay, so I owe $50,000. Then I sell my house for $100,000. That leaves me with $50,000 more. Yeah, that's correct. Which takes us back to our list for the final 3 things to do. And those are: 8th, monitor your bank accounts. Check how much money you have coming in and going out. This will give you an idea of what you're spending. 9th, invest wisely. Investing is important. It allows you to grow your wealth over time. 10th, think long term. By doing this, you'll be able to build a strong financial foundation for retirement. Finally, take control of your finances. Be responsible, be honest, and more importantly, stay calm. Wow, I feel like I've learned quite a lot already, but I still have no idea what to do next. Well, that's okay, DT. Let me know when you have questions or concerns. Okay, but what if they repeat it? It depends on if they're practicing, because if they practice, they'll get good. Gracias por escuchar. A la prochaine.
In this Simple Success podcast, as well as in our webinars and masterclasses, we very much want to hear your story. Well, to be real, in future episodes of the podcast, webinars, and masterclasses. And this means you. Your participation is critical to our mutual simple success. It's important to know how you think what you've thought, what you've tried, and what you've been unsure of trying, as we told you at the beginning. And as you also find in the show notes, we have ways you can contact us. It involves a special link where you can leave us a voice message, which just might see the light of day in a future podcast. We may have an email address for you as well in the future, and we'll let you know if that happens. Together, we're going to make it great. We're going to do what even we didn't think possible. This podcast and our other podcast are productions of Little Red Hen Industries. The supporting cast who helps me bake the bread includes Techno King John C. Brandy, Fact Checker Abraham Lincoln, French Consultant Virginia Mitchell, Media Expert Favor Abasi Ike, Psychologist Sigmund Freud, Rabbit Hole Advisor Dr. Marg Parrott, Sound Designer Guglielmo Marconi, Spanish Consultant Cameron J.K. Brandy, Videographer Alfred Hitchcock, Audio Props Les Paul, and inspiration goes to Napoleon Hill, Earl Nightingale, and Bob Proctor. We also have a website, and you can subscribe to both podcasts. You can even send us a video, audio, or text message, but of course, you'll have to head to the show notes, either on your phone or on the web, to actually get links and stuff. I mean, I could read the URLs where you could subscribe, support, or leave one of those video or audio messages, but you really don't want me to do that. And those explicit and clickable links are in the show notes. Finally, you can find us on Podmatch, where we consider guests, as well as consider guesting on other people's pods. And really, finally, the music for our pods comes from Cute by Ben Sound and from Piano Background by Nick Simon Adams, both on freesound.org.